Ignite your curiosity with Austin Next. We're watching Austin transform from a thriving ecosystem into a global superstar. With our host, Jason Scharf, we aspire to better comprehend the true nature of innovation. Together, we will uncover what makes a successful ecosystem and navigate the technologies shaping our future. Now let's dive into what's next.
Today's podcast is sponsored by Austin Private Wealth, a registered investment advisor focused on fee-only financial planning and investment management. Their mission is to serve affluent clients with personalized financial advice, fostering a trusted relationship that will endure for generations to come. Austin Private Wealth is not just about managing wealth. They're about inspiring you to embrace a future filled with possibilities and helping you architect enduring legacies. Their core values of integrity, service, caring, excellence, and growth are at the heart of everything they do. Connect with them today at austinprivatewealth.com.
Austin Private Wealth is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Austin Private Wealth and its representatives are properly licensed or exempt from licensure. No advice may be rendered by Austin Private Wealth unless a client service agreement is in place. Investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
I have no doubt that blockchain, the technology behind most cryptocurrencies, smart contracts, NFC, and the like, is one of the most important inventions so far in the 21st century. This is of particular interest to me as I advise several fintechs and other companies related to the crypto space. Texas is rapidly becoming a key player in this market. Crypto miners, like those operating the systems that validate blockchain transactions, have been moving to Texas due to our low power prices, available land for server farms, and our accommodating atmosphere. More and more of the companies here, whether they be in health tech, manufacturing, fintech, or other industries, leverage blockchain technologies to secure the transactions done on their systems. Today, we're going to take a deeper look into this part of the ecosystem and try to better understand where the industry is going in Austin and in Central Texas. Joining us is Lee Bratcher, the president and founder of the Texas Blockchain Council. Lee teaches at DBU, and he's also a captain in the U.S. Army Reserves, working as a tech scout for the 75th Innovation Command that supports the Army Futures Command. Lee has a master's in international relations from St. Mary's University, and he's completing his PhD at UT Dallas. He makes Richardson, Texas, his home with his wife, Becca, and their 2 daughters. Lee, welcome to Austin Next.
Gentlemen, it's a pleasure. Thanks for having me.
Definitely. Thank you for being here. Before we get started, I wanted just to say thank you for your service. It's always kind of really important to us to working with our active duty and our veterans. Before we kind of get into a blockchain stuff, what exactly is the 75th Innovation Command? I didn't even know there was such a thing.
That's a great question. The 75th Innovation Command is a Army Reserve unit that seeks to capitalize on some of the talents and skills in some of the Army Reserve officers and senior enlisted personnel who have civilian careers that place them in close proximity to the innovation, the technology, the emerging tech that's coming out of some of these tech hubs like Austin, Dallas, Houston. We've got teams in Chicago and the Valley and on the East Coast, so that the Army can be connected closely with emerging tech for defense applications.
Ever-changing landscape. No, that's great. So let's kind of get into it a bit. So can you describe the Texas Blockchain Council and what its goals are?
The Texas Blockchain Council is a nonprofit industry association, similar to like a chamber of commerce. Our goals are to see Texas become the jurisdiction of choice for blockchain innovation and to create business synergies, connections, business development opportunities for our member companies. We have about 65 member companies, about 140 individuals total that are members of the association, and growing very rapidly. We're a young organization, founded about a year and a half ago, and part of the public policy piece of our industry association is we also help to research and write legislation for consideration from legislators, and we were able to help to do some research on 2 pieces of legislation that passed this last session, the 87th session that ended in May. Governor Abbott signed those in June, and they'll go into effect on September 1st, here in about 2 weeks.
That's great. One of the questions, I want to take a real big 1,000,000-foot level, right? The language and concepts of blockchain are really starting to get into the mainstream, but I think there's probably, I've thought a little bit about it, but there's a lack of good definitions. So can you walk us through what's the difference between blockchain, cryptocurrency, Bitcoin, Ethereum, NFTs? I know there's lots of these kind of jargon terms floating out there, but anything you can kind of do to help set the stage?
Yes. I like to, whenever I have conversations with people about what blockchain is, I start at that level. I mean, it's really important to go from a 30,000 foot view. So the way I think about it is blockchain is the next iteration on double entry accounting. The way that we assign who owns what in a ledger system. So that's been around for 500 years when Luca Pacioli developed it in the Renaissance. It enabled transactions to take place over time and space when people didn't know each other, didn't trust each other, since they used the bookkeepers and debits and credits, and the financiers typically handled the books. That's evolved to where we are today. It's much more digital and complex, but it's still double entry accounting, and you still pay hefty fees to middlemen that create those trust layers. So what blockchain technology does through clever code and through public-private key cryptography is it creates a ledger system that enables these transactions to take place without expensive intermediaries. And the first, iteration of this, the invention of all this, was with the creation of Bitcoin in 2009 by Satoshi Nakamoto, a pseudonymous person that most people these days have at least heard that name before. It's pseudonymous. I mean, it could have been a person or a group of people, honestly. And they wrote the first white paper that really outlined this peer-to-peer transaction platform, and the rest is history. So, and we're still living that history. We're still in early innings.
Can you, and I think what you just talked about with the legislation that just passed, can you briefly describe the history of blockchain in Texas and how long has it been here, how to get started, and really what are the important milestones we should be thinking about?
Texas was initially pretty apprehensive to jump in. I think if you had 5 years ago looked at the states that were really at the forefront of this, it would have been California and Wyoming. There's some states that were definitely antagonistic towards crypto and blockchain and Bitcoin, New York being one of those states. Most people don't know this, but Wyoming actually invented the LLC. Delaware stole it, and now everyone incorporates in Delaware, but Wyoming invented it. So Wyoming has done a ton of great work with some legislative frameworks that provide regulatory clarity for blockchain firms there. So what we've done in Texas over the last 2 years is taken some best practices from Wyoming and some other folks in DC, like the Blockchain Association, the Digital Chamber of Commerce, and we put the size and dynamism of the Texas economy behind that. Texas is the 9th largest economy in the world, larger than Canada and Russia if it was just to be considered a country. So we really think that Texas is the place that this innovation should be happening. Of course, it's going to be happening all across the world, but we want to house it here because the dynamism of places like Austin and Dallas and Houston, some of the largest tech hubs, energy hubs, banking hubs in the world are here in Texas. So the two pieces of legislation that we worked on, we've been working on them for about a year, and it really kicked off this excitement about Texas. And the most important things for the Texas ecosystem have happened in the last 6 months. And it's policy related, and it's also related to Bitcoin mining. So I'll say the policy stuff first, then I'll jump over to Bitcoin mining. These two pieces of legislation that passed, one of them in particular created a legal framework around uniform commercial code. And that's House Bill 4474. Now that defines what a cryptocurrency is, what a virtual currency is, like Bitcoin. What does it mean to control it? And how do you perfect a security interest in it? That's just legalese for saying, if I have a Bitcoin and I want to loan it to you, or I want to give it to you as collateral and you're lending me US dollars, how do you perfect your security interest in that Bitcoin? And so the law provided some clarity for large institutions to become more involved in cryptocurrency, because it became clear how it would be adjudicated if there was ever a dispute. And so you really need business law the Uniform Commercial Code to be the backbone of that. On the policy front, the other thing that was really important was actually back on June 10th when the Texas Banking Commissioner, Mr. Charles Cooper, he and his legal team outlined a framework that said that Texas chartered banks can custody crypto assets. So if you have Bitcoin and you don't want to self-custody on an exchange or self-custody in a wallet or a cold storage somewhere or a paper wallet, you could actually custody that in your bank. I wouldn't recommend that. I would recommend self-custody, but maybe some people aren't as comfortable with, the ways of custodying your cryptocurrency. So they prefer that their bankers do it for them. And perhaps somebody who is not familiar with the technology, or maybe their son or daughter or grandson or granddaughter are the ones that got them into crypto, and they'd prefer to just have their banker custody that for them. So that was big news back in June. And then on the mining side, cryptocurrency mining, Texas is becoming the hub for Bitcoin mining. One, because China banned Bitcoin mining about 3 months ago. And that was huge news because they accounted for about 55% of the total Bitcoin hash rate a year ago. And the price of energy in Texas is better than anywhere in the world. We're just incredibly blessed with energy. I'd love to talk a little bit more about how Bitcoin mining can be beneficial to the Texas grid, if you guys are open to jumping into that conversation now.
Absolutely. One of the things that I heard were that the large miners had arrangements with ERCOT so that when ERCOT needed the power, they would instruct the miners to discontinue work, but in return for that, they would pay them for the power that wasn't being used.
That's exactly right. And that's the beauty here. People hear that Bitcoin mining takes up a lot of energy, and it does. But what it does is it soaks up unused energy that's not otherwise going to be making it to your house or my house or the hospital down the street, right? We're incredibly blessed in Texas to have this energy abundance. But what we don't have is enough transmission capacity to get that energy from where it's being generated to the population centers of Texas. And we also have challenges with intermittency with our abundant wind and solar. So what Bitcoin mining does is solves both of those problems. Bitcoin mines are just data centers. They can be located anywhere. You can put them out next to a solar field or next to a natural gas plant or next to stranded gas or flared gas that's otherwise being wasted, and use that flared gas to put into a genset and generate electricity to mine Bitcoin. So it creates economic opportunities in places that there otherwise was not opportunity. And the really industrial scale mines do exactly what you said, Michael. They push their power back into the grid when demand starts to peak. So for example, when in the winter storm that we had in February, Uri, as soon as demand started to peak and people were trying to turn their heaters up, the Bitcoin miners in Texas all turned off. They did it for two reasons. One, it's the right thing to do. And also they turned off within 5 seconds, by the way. They can power these things up and down within 5 seconds. It takes peaker plants, 6 hours, which really doesn't help with the duck curve. They do that in 5 seconds. They did it because of the right thing to do. And they also did it because they had a profit motive to do so. So I love when the free market aligns with, the incentives of everybody else. And there's a free market profit motive to do the right thing. And also they just want to do it because their communities needed the power. ERCOT will create these power purchase agreements with them. And they're able to, use this power when demand is low. And if there comes a point where ERCOT says, hey, in about an hour, we're going to hit peak demand, we really appreciate if you sell that power back in the grid, then they push that power back into the grid and get paid for that power.
You talked a little bit about the duck curve, and for most people that don't know, that's how we use electricity over the course of a day. Now we use so much in the afternoons, or at least we used to use a lot in the afternoons when people came home from work. I haven't seen how much of that has changed now that people are working from home. But one of the questions I've had about that is, does the power usage curve, whatever it is today, align with the transaction validation curve that the miners are taking advantage of?
That's a great question. The network is so large that it doesn't really matter. Okay. So if the Texas miners choose to turn off for a few minutes, the Bitcoin validation network and the miners all across the world will pick up the slack.
Okay.
So it doesn't affect the block times, doesn't affect the transaction volume. It may provide some extra revenue and block rewards to miners in other parts of the world that aren't off during that time. But the Texas Bitcoin miners are okay with that because they're making more revenue selling their power back to the grid, because the Texas grid is on a free, it's deregulated. So the price floats with demand and supply. And so when demand is high, if the power price is high, they're actually making more money selling power back into the grid than they would be mining Bitcoin.
Okay. We've talked in general about miners, but I want to get a little more specific as we delve into what Texas looks like in the crypto and blockchain space. What are the companies that we should know that are established, and what are the companies we should be looking for that are startups in this space?
Yeah, that's a great question, and I could probably go on for 10 minutes on the answer. So I'll try to keep it brief. Folks can go to our website and see a bunch of our member companies that are operating in the space. It's texasblockchaincouncil.org. If they want to meet, the CEOs of these companies in person, we're actually hosting a summit in Austin on October 8th. That's actually the Texas Blockchain Summit. And I'm assuming a lot of your audience is in Austin or in other hubs of innovation across the country. They may want to come in for this. It's going to be a great opportunity to meet some of these CEOs of some of these innovative companies. But I'd love to just talk about these companies in three different verticals. You've got the miners, data center miners, Bitcoin, Ethereum, and others, predominantly Bitcoin in Texas. You've got the financial services companies, and then you've got the blockchain for medical, or I'll say other, right? The supply chain or medical, or folks who are using this technology not in the crypto space. As far as supply chain, or as far as financial services companies goes in Austin, the name that you'll want to know is Unchained Capital. It's a firm in Austin, based in Austin, that helps with crypto custody and allows people to retain custody of their own cryptographic keys. So they're self-custodying their wallets, but they have some really neat software solutions that make it possible for anybody to do that, even those without a technology background. They also have some lending products and some other financial services products. So they're a great company there in Austin. I was actually down in Austin last night. I'm in Dallas right now, but I was in Austin last night at a meetup that they hosted at their offices, and they had I'd say about 200 people there. It was a great turnout. And then there's several other financial services companies. NYDIG is a big one, obviously out of New York, but a lot of their clients are in Austin, and they're coming here to help a lot of these their banking partners custody crypto. So that's a big one. On the mining side, some of the big names, Riot is a publicly traded mining company that owns Windstone. They're doing mining here in Texas. Argo Blockchain is here. Core Scientific and BlockCap are large firms here. You've got Skybox Data Centers, which they're a data center firm, but they also help with Bitcoin mining. And then, on the third vertical that I mentioned, the blockchain for supply chain or blockchain for medical, Dell Medical is actually doing some interesting work with blockchain around digital identity and medical records. You've got companies, the big four accounting firms, plus Grant Thornton, of course, Deloitte, and Accenture. They are helping a lot of these supply chain companies, big third-party logistics providers, track the provenance of goods on blockchain. And then, of course, IBM has Hyperledger. IBM's got large offices in Austin, as you guys are well aware of. So I could continue for a long time, but those are some of the names that come to mind immediately.
Okay. How would you describe the maturity of the blockchain industry, both in Central Texas as well as in the rest of Texas?
It is maturing, much more mature than it would have been a few years ago, where people maybe thought the only people that were into crypto were 22-year-old, folks, like hackers on their computer or something like that. It is far more mature than that. I mean, there's real money in the space. Fidelity, JP Morgan, some of the hedge funds that have been involved in the space in the last 24 months. When you start getting that kind of money, 7-8 figure investments into companies and larger, actually some significantly larger than that, you really start to bring in the professional audience. And so I would say I hosted a meetup in Dallas a couple nights ago, and everybody there were accountants, there were attorneys, they were private equity guys, they were, oil and gas folks, energy brokers. It was very professional. It was almost like like you would go to like an accounting or a legal conference or something like that. Everybody's wearing suits, and now you can still find the meetups that are some of the Bitcoin OGs, as I'll call them, like the old school, the originals. They're a little bit more willing to let their hair down, wear a t-shirt to a meetup, and speak a little bit more frankly about the space and about the innovation that's happening.
You mentioned a couple of interesting applications. You talked about DelMed, and they're diving into, if you will, the use of blockchain as part of their digital ID and medical records. You talked about supply chains and the ability to use blockchain to prove provenance. If I were running a company in another consumer products good industry, or the media industry, or the aerospace industry, where would I want to get started with blockchain?
It's a great question. It really depends on the industry, but I'll tell you the thing that you want to look for is a consortium of entities and business players, business actors that are operating together, that have a need to have shared information and shared databases that shouldn't be siloed. For example, the provenance piece, the provenance of lettuce. So you're worried that you want to be able to track salmonella on lettuce, or what's E. coli, I guess would be a better example for lettuce. You're wanting to track that from farm to table, or really from farm to the grocery store. So if you've narrowed it down to, hey, this grocery store, there was an outbreak, rather than like removing the lettuce on HEB's, I grew up in Austin, so I know HEB's, like the store there in Austin, everyone goes to buy their produce at. Like for the entire city of Austin, you don't want to, remove produce, like millions of dollars worth of waste. You can actually use blockchain to backwards track, like, okay, what, even down to the truck that this came on, from this farm, from this truck to this store. And that's just not possible right now. So you could track the provenance of goods. And the thing that you want, because blockchain is not a panacea. Traditional databases can solve most of these kinds of problems. But if you have a consortium or a group of companies that need to really be able to see into data, but they don't necessarily trust each other, you have the third-party logistics provider and the farm and perhaps the warehouse and then the store, and there's oftentimes even many more business partners in that chain. And this is not just for supply chain. This applies to many other industry verticals, but we're kind of on the supply chain analogy right now, so I'll keep with that. They need to be able to share data with each other, but in the current model, they have an incentive to keep some of that data private and to really not have visibility into what everybody else is doing. You don't want to give away your trade secret. If you're the third-party logistics provider and you're giving away all this data, then maybe Walmart says, well, we're going to use somebody else because we see all this data. We understand your business model, and somebody else is doing it more efficiently, or we'll do it ourselves because we understand. So they can provide access to information that was otherwise siloed. Blockchain will never be a use case if your company is operating solely internally and you're wanting to track things on blockchain. That's not the right use case. You'll just use a database for that. It's only if you're operating with other companies, and there may be a business relationship there, but it's not like the kind of business relationship where you trust them 100%, where you're just going to give them all your data, or you give them all the information about what you do and how you do it.
As we go kind of looking forward, what are the challenges that the blockchain industry faces in Texas and in general?
Well, the infrastructure bill that the Senate passed a couple of weeks ago is a big challenge for our industry. There was very broad language written into that bill by, we suspect, by folks in the administration who were wanting to get more visibility into blockchain transactions. And that's certainly a good thing. I think most players in the industry want, they want to operate as a traditional business. They want to have KYC and AML. KYC is know your customer. AML is anti-money laundering. They want to pay taxes at the proper rate. But there was really a disconnect with what the language was in the infrastructure bill around cryptocurrency. People may or may not be aware, it caused a pretty big stir. The cryptocurrency industry actually held up the infrastructure bill for several days because there was confusion about 2 pages on this massive bill that related to cryptocurrency. And what they had done is they defined the word broker very broadly. And brokers have an increased reporting requirement to the IRS around transactions and around amounts and values and the actors in the transaction. And when you use the kind of language that they used in the infrastructure bill, it is possible that broker could be defined to include software developers who are writing code for digital wallets or Bitcoin miners or even individuals that were interacting in the space in some capacities, like in DeFi. DeFi stands for decentralized finance. So it was really too broad. And several senators tried to propose an amendment, and that's where the tension came in. The White House and the administration, the IRS and Treasury, really just wanted to ram this through, and they did. And the amendment actually almost passed. It was Wyden, Toomey, and Lummis, bipartisan amendment, three senators. And there was a senator from Alabama who objected to the amendment being included, not because he objected to the amendment, but because he wanted to include more defense spending in the infrastructure bill. And as soon as he tried to attach that rider to the amendment, then the senator from Vermont, Senator Sanders, objected, and it basically blew up the amendment. So now that has gone to the House, and we're fighting the good fight there in the House to try to clarify the language again, not so that cryptocurrency can be unregulated, so that it can be regulated intelligently, and so we don't push this innovation offshore. The crypto industry used to be the Wild West. 5, 6, 7, 8, 9 years ago, there was a lot of criminal activity that took place on these networks, on the Bitcoin network, and your audience will be familiar with that. And that maybe is the only thing that they've heard about crypto, is that it was used by drug dealers. But they may not be aware that last year, the CIA director said that after studying the Bitcoin blockchain and other cryptos, that he believes that there's more nefarious activity in the traditional banking sector than there is in crypto now. Just because the Department of Justice and the FBI have partnered with on-chain analytics firms to be able to track down these bad actors. You notice that the ransom money for the pipeline hack was actually recovered by the FBI and the Department of Justice through a warrant on a server because the hackers had stored some of those funds on a hot wallet that was connected to the internet. So very, very complex stuff. I don't want to get too deep in the weeds.
You're fighting the good fight there, it sounds like. So we always like to kind of end our podcast with kind of the central question that we're asking. So, Lee, what's next, Austin?
Austin is becoming the hub of innovation for blockchain. Firms are moving to Austin left and right for several reasons. These hubs of innovation, they feed off of themselves. So they're sort of a self-fulfilling prophecy. As Austin becomes more of a hub, a tech hub and a hub for innovation, it will grow and grow exponentially. The pandemic really struck New York and San Francisco and the Bay Area very, very hard. And Austin wasn't, it was hit, but it wasn't hit as hard as those areas were. And so the tech talent and the venture capital and private equity that's moving here from those places is making Austin on par or a near peer to the Valley and to New York. Of course, not by population size by any means, but as far as a hub of innovation where venture capital wants to go and where entrepreneurs want to go. And it actually helps in the crypto industry that Texas has a favorable regulatory climate, great business taxes, low energy costs for them on the mining side. So you're seeing miners move their headquarters to Texas. You're seeing entrepreneurs come here to raise capital. Used to, you only went to the Valley for fintechs to raise capital. And now you're seeing people come to Dallas and Houston and Austin to raise capital, which is a great thing. So what's next for Austin? A booming decade in innovation.
That's what we like to hear. Well, Lee, this has been extremely educational. I appreciate the time and thank you for coming on.
Gentlemen, it was great. I appreciate you having me. We'd love to have you guys out at the summit on October 8th in Austin. Maybe you guys can come and interview some of the CEOs of these companies there.
Sounds great. So what's next, Austin? We're glad you've joined us on this journey. Please subscribe at your favorite podcast catcher, leave us a review, and let your colleagues know about us. This will help us grow the podcast and continue bringing you unique interviews and insights. Thanks again for listening, and see you soon.